Welcome, everybody. Welcome to Jam Capital's Market Update. First things first, let's get this over with. And let's talk about past performance is no guarantee of future results. There is no guarantee of future performance. All investments involve risk, including risk of loss. And lastly, this is just purely education and with a little dash of entertainment. So the first thing I want to do is I want to look at the S&P, specifically the S&P Emini futures. Here we are. So this right here is a daily chart of the S&P Emini futures. Currently its scale is in log form. So the first thing we're going to look at here is what can happen in a few hours. What's the start? How are we going to see Monday morning? Well, right now, in my estimation, going from the April 2025 lows, I have right here blue 1, which is a minor degree. And what's interesting here is in the blue 2 or minor 2 is I have a running diagonal, which is interesting, which makes sense. And then I have an extension within this blue 3. So if we look at this, kind of piques our interest. Okay, what do we got going here? Oh, it's only 78.6% of blue 1. So that to me shows a sign of low growth. There's nothing that's been making this market move fundamental wise. There's no trigger that has gotten the market, so to speak, excited. Nothing's turned on it. So I also want to show you. So theoretically, let's say the blue minor 3 is our top. The last few weeks have been obviously even through the news cycle, looking at price. There's been a lot of confusion, a lot of negativity, a lot of positivity. It's all been mashed together, and quite frankly, the market confused. And what we're seeing here makes sense as I've presented a diagonal, wave 4 diagonal, from its end of January highs to presently. So if we look at this, this makes sense if I put a trend line from the bottom. Sorry, hold on one second. We'll get to that. But let's look at this diagonal right here. So this quite frankly makes sense to me. I'm going to show some options that confirm this, that I do expect to see more selling. Could we see more selling, price come down to this bottom trend line? Absolutely. I think there's a decent probability that this bottom trend line does get hit at some point tomorrow or within the next day. After that, and then from there, I think it'll almost be a buy the dip moment mentality, folk coming out and buying this, and it's going to rip within this trend line. Obviously 69.83 then becomes resistance. If it blows through this top parallel trend line, next resistance is 69.83, which once it breaks that, it's likely to see 7,500, 8,000. I don't think that's out of the question. Actually, 7,500 is probably more realistic based on blue 1 compared to blue 3, as this not being at least 100%. So this blue 3 cannot be the shortest. But either way, this top trend line, even if it's breached, it can be a throw over. I would expect then to see this midline of this parallel diagonal to be hit right around 6,500, 64.80, whatever it may be. This kind of gives us a guideline of where it possibly can go. And if we look at past price action, I just look at this massive support. So something's going on, whether the market's going up or we're going to see a hard move down in the next few weeks. I don't know, but I do know this support level right here, 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 and here. That's in my opinion, those are recipes for a volatile move. Whether it's up or it's down, I don't know. But I know that's more than likely that we're going to see some sort of volatile price action. So I want us to look at this, and in Elliott wave, diagonals can be wave fours, they can be A waves, they can be B waves. So in this case, I want us to try to think outside of the box. Let's say I'm completely wrong with this. This isn't a wave three. Let's say the wave three ended here. Here's our four, and then I'm not going to put up a five, but the five would be right here. So what I want to do is, in Elliott wave, typically what happens is the bottom of two and the bottom of four, using a parallel trend line, you place an anchor at the bottom of two, bottom of four, and the top of three to give an indication or a range of where wave five should end. So if we're doing it based off of this right here, it already looks like the market is topped. So the wave five would be here, which makes sense because if we also look at this bottom trend line between 2 and 4, right here, the start of this A wave has been broken. So from a technical standpoint, we've just broken the first layer of support, which then means this price range down here comes into effect. And then quite possibly this could be breached down here. That I don't know. Just once price shows itself more in the upcoming weeks, it may be too late. I don't know. Honestly, I don't care. All I'm trying to do is figure out where the market wants to go. And once I figure out where it wants to go, then you can place entries or you can have exits. So that's what makes this interesting. This right here, this diagonal can be the first move, first confirming move to the downside, or it can be the technically the last move before we see the last move before the last up move within a trend. So in my opinion, it's a very, very important time because the market's going to show itself. Whether it is bullish or bearish, there's going to be a confirmation. And quite frankly, it's going to ruffle feathers. So next, I want to show you some options that I found that kind of confirm what I'm saying. Some would call it confirmation biased. So first one is out of the money, is a 675 call, expires on the 16th. So if we can see here, I have this as a 1, I have this as a 2, a 3, 4, 1, 2, just like we saw on the S&P mini chart, this wave 3 is short. So what I would expect to see another move down. Obviously not, I would expect something in the 20-cent range. And then come afternoon, I would expect to see this back up here being hit and this back up here being hit, possibly, depending on how crazy the price swing is. But these two price ranges come into effect. In the money, the 660 calls expire on the 16th. It's usually the same thing. This right here is probably going to, obviously being in the money, is probably going to bottom out quicker. And then you're going to have a more likely a resistance level up here. Now let's look at some puts. These expire. Okay, this one's a 663 put that expires tomorrow, the 316. And most importantly, I believe this is um, an A, B, and a C. So this I have this as a completed move. So what I'm doing is I'm taking the top of this and I'm just putting a trend line on it because I believe this is another A, B, C. This is a correction down. Correction down, move up. Here's its base. I believe this trend line right here shows that it'll be a early morning breakout, which would be the opposite of what we just saw in those calls. So confirming that it's going to be an early morning negative day. So I also want to look at here's the March 17th 650 puts. And this is the same thing. You can put a trend line from here to here and it's going to have that same breakout. It's going to have the same breakout and this is probably going to just get slaughtered. So, in summary, when we're looking at the S&P tomorrow, I'm expecting a morning of red followed by relief in the afternoon. And quite frankly, next the 17th and maybe the 18th to be in red days or maybe the rest of the week, I don't know. But what I'm looking at is tomorrow to see a early morning red followed by green in the afternoon. And whether that gives us a choppy move up to 68 or a quote unquote 5 wave sequence or an impulse, almost like this right here, that remains to be seen. I couldn't tell you, but I do know we have a trading range of 6,500 to 68 was it 6983. That's our range from 6983 to 6500. We're going to see some business. I don't know. Hopefully you enjoyed this video, and quite frankly, I really don't know what the fuck I'm doing, so have a good night.